Welcome to this explainer. Today we are cutting right through all that daily market noise and decoding the hard data behind 7 prominent stocks. We're going to match real numbers to real investment strategies. You know, with thousands of options out there, choosing the right stock can honestly feel like throwing darts blindfolded. That is, unless you apply a specific strategy lens. When you filter by the right financial metrics, the noise fades away and a totally clear picture emerges. Here is our contestant lineup. And I promise you, we are not going to miss a single stock today. We're going to systematically break down every single one of these 7 household names: Starbucks, T-Mobile, Comcast, Adobe, CrowdStrike, Southern Company, and McKesson. We'll be comparing key financial data like their fundamental price-to-earnings ratios and their year-over-year revenue growth trends. By looking closely at this data, we can objectively sort these companies into their proper strategic buckets. To find where they actually belong, we're going to put on 5 different investor goggles: the deep value approach, the high growth strategy, quality and momentum plays, seeking reliable dividend income, and finally, finding your perfect strategy. Let's kick things off with Section 1, the deep value approach. So what does this actually mean? Well, the value investor is basically digging through the market's discount bin. They completely ignore those trending social media stocks, and they only care about paying pennies on the dollar for fundamental assets and earnings. Just look at Comcast. It's sitting on an exceptionally low price-to-earnings ratio of just 5.2x. I mean, when the broader market is trading at massive multiples, finding an established media giant like this trading at roughly 5 times its earnings, that is an absolute deep value dream right there. But then compare that directly to CrowdStrike. A value investor would probably run screaming from CrowdStrike's premium 401x PE tag. It's wild. While Comcast trades at a price to sales of 0.8, CrowdStrike demands over 22. They are literal polar opposites. McKesson also easily earns its spot in the value bucket with an incredibly attractive PEG ratio of 1.08. On the flip side, we have to officially disqualify Starbucks, Adobe, and Southern Company from the value category completely. Their premium multiples simply price them way out of the discount bin. All right, moving right along to Section 2, the high growth strategy. This one's, it's for the aggressive investor out there hunting for market chips. You know, high valuation multiples don't scare these folks in the slightest. They're more than happy to pay a massive premium today if it means seeing massive top-line revenue expansion tomorrow. And CrowdStrike is leading the pack here with stellar 22.2% revenue growth. That is a textbook high-growth story that is vastly outpacing its peers. Adobe follows up with a very healthy 12%. But then you look at Starbucks, and they're lagging significantly in the single digits at just 4.3%. Now, T-Mobile and McKesson, they fit this growth narrative beautifully, both delivering near double-digit expansion. However, we have to drop mature giants like Comcast and Southern Company here. Don't get me wrong, they're reliable, but their lower single-digit growth rates simply ground them when we're looking for rocket ships. Okay, let's switch gears to Section 3, quality and momentum plays. Here's the deal. Quality investors want highly profitable, efficient machines with bulletproof balance sheets. Momentum investors, on the other hand, just want to surf. They want to ride a wave that is already surging upwards. Let's see where our lineup lands. Adobe is an absolute quality powerhouse, boasting a nearly 39% operating margin and a jaw-dropping 58.8% return on equity. T-Mobile definitely holds its own too, but Starbucks completely drops out of the quality race here. Dealing with a negative ROE, their financial coffee is looking, well, a little watered down right now. Flipping over to momentum, CrowdStrike and McKesson are the undisputed winners. CrowdStrike is up over 30% in the past year, but McKesson is the real shocker here, pulling in a stellar 55% return over 52 weeks. This completely contrasts with Comcast and T-Mobile, which are honestly stuck in pretty clear underperforming downtrends right now. Which brings us to Section 4, seeking reliable dividend income. This model is definitely not about chasing wild top-line growth or hunting for deep value anomalies. It's strictly about finding those established companies that are going to write you a reliable check every single quarter, no matter what. And wow, Comcast and Southern Company are the absolute superstars here. Comcast provides a safe 4% yield. Hey, maybe that's enough to cover a fraction of your actual cable bill, right? Meanwhile, Southern Company is a classic aristocrat offering a super secure 3% yield that's backed by 24 years of consecutive increases. But remember, we don't want to miss any stock in our analysis. So if you're a strict income investor, you've got to scratch CrowdStrike and Adobe right off your list. Entirely. They pay 0% in dividends. And McKesson isn't much better, offering a mere 0.4% token yield that really won't move the needle for an income portfolio. Finally, let's look at Section 5, Finding Your Perfect Strategy. So what does this all mean? Well, the truth is, there's no single best overall stock in the market. There's only the best stock for your specific model. As the data clearly shows, when we categorize each stock by its fit for value, growth, quality, and income strategies, every single one of our 7 stocks finds a perfect strategic home, except perhaps for Starbucks, which is just kind of struggling across the board right now. Whether you are a deep value hunter grabbing up discounted shares of Comcast, a growth at a reasonable price investor picking up Adobe and T-Mobile, an aggressive momentum chaser riding the CrowdStrike wave, or someone who just wants Southern companies' steady income, the numbers dictate the fit. So as we wrap up this explainer, I want you to take a hard look at your own portfolio. Are you buying based on hard data, or are you just chasing the latest trends? Ask yourself, which of these 5 investor personalities actually matches the stocks you own right now?